The Case-Shiller Home Price Index has just surged to new all-time highs, and median US home price sales have broken new all-time highs for the 9th straight week, now at highs of $397,000, a 4.7% year-on-year increase. Home prices have remained resilient despite extremely high mortgage rates pushing down affordability to record lows, which is partly due to inventory remaining historically low and propping up prices. However, there are now clear signs that momentum is slowing down, and the housing bubble that has been growing and growing over the last few years looks to be on the verge of popping. Looking at recent Redfin data, it seems that sellers are being forced to accept lower offers from buyers, as the typical home is now selling for 0.4% less than the asking price. Now, this may seem like a small percentage, but in fact this is the first time that a typical home has sold for under list price in July since the start of 2020, when the market was suffering from pandemic fear, and is a clear signal that the housing market is starting to deteriorate. Additionally, just 32% of homes are selling for above asking price, not only down 36% from a year ago, but it is also the lowest share for this time of the year since 2020. Meanwhile, the one variable that has been propping up the housing market massively in recent history, which is inventory, is also continuing to rise and put downwards pressure on home prices. New listings are up 7.3% year over year, while active listings are up 18.3% year over year, the highest that housing supply has been at for this time of the year in recent history, equating to 3.6 months of supply. Rock bottom affordability is one of the driving factors behind this recent surge in housing inventory, as the demand is simply not there to match the supply. As we've seen in the data, home prices just continue to rise despite the cost of borrowing still being extremely high relative to the recent historic average, with the 30-year fixed-rate mortgage rate in the US still hovering around the 7% mark. This is the highest that it has been since 2002, still above the peak seen during the global financial crisis, and multiple times higher than the levels that we have seen over the last 10 years or so. This does create a horrible buying environment for potential home buyers who are seeing their median housing payments rise to $2,722 a month, according to Redfin, which is up 6.1% year on year. These homebuyer payments have essentially been rising every year, and the gap between housing payments now and back in 2021, where the median housing payment was just over $1,600, is quite staggering. Household income has significantly lagged behind these rising monthly housing payments, and as we can see by looking at this housing payment to income ratio, the median income family is now paying a whopping 35.9% of their income for a median priced home. This is the highest portion of household income sacrificed to own a home since the 1980s, and it is a clear product of the sky-high home prices and mortgage rates forcing homebuyers to take out massive loans at high interest rates despite not seeing relative increases in their wages. It is therefore no surprise that these conditions have led to the Housing Affordability Index plunging since 2021, now close to breaking record lows. And this recent home affordability report from Atom Data does show that median-priced family homes and condos are less affordable in the second quarter of 2024 compared to historical averages in 99% of US counties. This report also noted that the wage needed to afford a typical home is 25% higher than the US average wage, and with housing payments now so high and affordability so low, it is unsurprising that we are seeing housing foreclosures and delinquencies rise, with multifamily delinquencies in particular surging over the last couple of years, now close to previous highs seen in 2010. And this rising housing inventory problem is only going to get worse in the future across the housing market, as there are still a lot of homes flooding the market every single day from home builders, and this is going to put more and more downwards pressure on house prices. Home builders did just report their highest level of inventory for sale since the peak of the housing bubble in 2006, now at 481,000 homes for sale. And specifically in the south, home builder inventory just hit 299,000, which is the highest number recorded and exceeds the previous record set in 2006. And the total number of housing units under construction is at one of the highest levels that we have seen in history, and the highest level that it has been since the early 1970s. The problem is that there is a significant lag time period between when planning begins for new home construction and when a new home can actually be sold on the market. Housing affordability conditions have rapidly deteriorated over the last year or so, and the demand that was once there for new homes has fallen drastically, meaning that there is now far less demand for homes compared to before. We can in fact see home builders start to react to these changing housing market conditions, as the total number of units under construction has started to fall since the end of 2023. However, it does still remain extremely high and is going to take a number of years for these units that are still under construction to be finished. A big red flag that is now emerging is the growing disconnect between the number of single-family housing units under construction and the number of new homes that are actually being sold. These two metrics have historically been very highly correlated, which makes sense as builders don't want to be sitting on a ton of inventory that they can't shift. However, since around 2021, we have seen the number of housing units under construction pull ahead of the number of units that are actually being sold. This is a sign that home builders cannot sell their homes at the pace that they once thought they could back when planning permission for these new homes started, as affordability conditions and therefore demand has fallen off a cliff. Because of this growing stock of new build homes that don't have buyers, it is becoming clear that home builders are going to have to cut prices or offer other types of incentives for buyers to entice them to buy their homes. Looking closer at a regional level, some cities are seeing their housing inventory levels rise much more rapidly than others, and as we saw earlier, this is impacting the south the most, with some of the cities with the highest inventory growth seeing very scary numbers. Tampa, Florida has seen the biggest surge in housing inventory at a whopping 93% increase year on year, and in fact Florida is the state that is getting hit the hardest from rapidly rising inventory. Florida makes up all of the top 4 cities on the list, and only 3 cities in the top 10 are not in Florida, suggesting that Florida home prices are the most vulnerable from the tidal wave of supply that is hitting the market. This recent surge in inventory in the south now puts it just 17% below pre-pandemic levels, despite home prices obviously being far higher now. All of this inventory data further backs up the theory that there is simply too much housing supply out there right now, overall but also specifically in the south more so, to match the current demand for houses at current house price levels and the current mortgage rates, and the bubble could be about to pop very soon, which could begin in the south. As a result of all of these housing market conditions discussed, we are continuing to see one of the biggest mortgage market downturns in history, with the Mortgage Purchase Applications Index remaining below the previous historic low. And with this, we are seeing the US Pending Home Sale Index plunge to new lows, now down 6.6% year on year. Meanwhile, on a month-on-month basis, pending home sales unexpectedly did plunge 2.1% in May, which was lower than what analysts did expect. And with fewer people buying homes, home builders are becoming more pessimistic about the future of the housing market too, despite inventory levels still being relatively low historically. Here we can see the home builder confidence has dropped dramatically since the Fed started hiking, although it still remains above the lows that were seen at the tail end of the global financial crisis, when there were very few new homes being built. It also hasn't quite dropped as much as home buyer confidence, which is deep into record lows, which does paint a picture on consumer sentiment. It's not just the housing market though that is facing a bubble pop-in, and in fact there are a number of major institutions losing faith in the US economy overall and sounding the alarm on a major recession that is potentially on its way. My previous video goes into more detail on this topic, and you can check it out by clicking on screen right now. Aside from that, if you enjoyed the video, please be sure to leave a like and subscribe, as that does help out the channel a lot. And thanks a lot for watching.